Good afternoon, everybody. Kirk Spano, Tuesday question and answer session. Got about a half dozen questions that were emailed to me or put on the message boards. So if I buzz through those, and in general, I would just say, with a couple of exceptions, you're seeing some pretty good performance from a lot of our stocks. So I will start with Open Door. We bought Open Door in here, and for most people, it's probably up 60-70%. And I would point out that they just raised a lot of money, expanded their credit line so that they can buy an awful lot of properties in the open market. Now, the question becomes, do they pull a Zillow and have to pull back on their plans? Zillow announced that they are going to stop buying properties here towards the end of the year and work through their inventory. Zillow is working through their inventory of properties, going to sell some of them off, which is the whole point of being a flipper, and then get back into the market at another point. And some people are criticizing Zillow for saying, well, your model's not working. I'd say just the opposite. They're making a profit on every property they flip, and I think they're pretty sensible in backing off on the buying frenzy at this point. So Open Door, which has been managed pretty well, and excluding one-time charge, they're profitable. The question becomes, what can they do with $9 billion? And that's really what they have access to. Zillow, by comparison, has less access to capital than Open Door. I would presume the Open Door is going to be more selective in the properties that they buy and just continue to flip. As I told you, was central to my thesis is that Open Door, I think, is just going to become the biggest home flipper in America by far. You have a lot of hedge funds that are also buying properties. So I think it's pretty smart that these guys would back off over at Zillow. And if Open Door does the same, they'll probably get crucified for it, but it's probably the right business decision. So if you're up 60-70%, somebody wanted to know, should they write covered calls? So I'd say you probably can do two things, and I should probably do an update to the retirement income options. I do think that Zillow is kind of a harbinger of the way the stocks can be treated. So if I were you, I would probably trim a little bit of Open Door if it's above, say, a 2% holding, trim it back to about 2% or give or take, but take some of the profits off the table. I wouldn't reduce my initial investment, so I would only take profits off the table. So if I put in 10,000 and it's now worth 16,000, maybe you sell off 6,000, or sell off 3,000 and write a covered call against the other 3,000. It's really up to you, depending on how many shares you own, what kind of risk you want to take. Based on the growth rate going forward, you're looking at probably a double on this stock in the next 1 or 2 years from the current price. But if you want to do a little bit more ebb and flow trading there, that's how you would do it. I would trim the profits with the idea of buying back in around 20. Could go a little lower, if there's pessimism in the market. But 20-ish, I think for a lot of people, you're splitting hairs if you make a trade here. But again, if you want to do a little tinkering with the profitable part of the position, go on and do that. And if you haven't gotten in the Open Door, if it pulls down to 20-ish, which I think is quite possible, at that point, take a starter position and sell a cash secured put as well. I think something is likely to shake out in that direction. Get your, we'll have Shooter do a chart on this later on and post it, but you probably get something like that. Their growth rate for next year is projected to be around 60%, and then who knows about after that. There's still a shortage of single family homes in America. I don't expect some big real estate crash, as real estate's not particularly heavily leveraged at this point, and the interest rates on that leverage are pretty low and go out 5, 10, and 20 years in most cases. So I don't know that there's a ton of risk in real estate. I just don't know that there's the type of rally that you just saw available in real estate. That's why I've been looking at development. It's not a cheap market for existing properties, but it's not horrifically expensive either. So if they're diligent in their approach with what they're buying, fixing up and then selling, or what they're buying, fixing up and then renting, which I think is going to also be a big business of theirs, they should be just fine. But their valuation is pretty much fairly valued right now based on trailing 12 months. There's not a bargain here at 24. but based on the forward-looking 12 months, probably breaks out past its high again in the next year or two. So I do think this one goes up into 50s, 60s at some point in the next couple of years. And that's why you don't need to make a trade. But again, if you want to tinker around the edges, trim it, sell a covered call, and then get that money back into the stock down here around 20. Somebody else asked about Ginkgo Bioworks. They asked, is there something weird going on with Reddit? No. There is something going on with another gigantic investor getting involved with Ginkgo Bioworks. Now, at a $28 billion valuation, you're betting on the come because they don't make that much money yet, but it is a platform company in biotech. Think about what some of the platform companies in tech are valued at. And this is really the first one in biotech, where people who are doing research on biotech can use their tools to develop medicines. I think that that's a big deal. I think it is the future. I think that all the small shops are going to use these guys. Somebody's going to copy them eventually, at least at scale. There's a couple small ones, but they don't have the resources of Ginkgo Bioworks. So if you're an academic and a couple of your buddies, a couple of your PhD hanging out buddies, your bros, decide, hey, I want to start a biotech company based on this thing or that thing or the other thing. You go to Ginkgo Bioworks, say, hey, we want to rent your platform and we'll sign your deal that you get a portion of the royalties, that you get a royalty if we develop something. Let us use your platform. Ginkgo Bioworks says, sure, here's the standard contract, plus or minus. I'm sure they negotiate some of these things, and away you go. So now everybody with a good idea can work on their biotech idea versus having to build all the infrastructure, which is incredibly expensive. So what Ginkgo Bioworks is doing is removing the barrier to entry for having the tools to be able to do biotech work. So there you have it. And they're going to get a cut of everything developed on their platform. That's a pretty neat business. So when you take a look at Unity or other companies in software and you go, what are they developing? You take a look at Amazon and everybody else that uses their platform. When you see the potential and the fact that these guys are pretty much have huge first mover advantage, you go, pretty easily could be $100 or $200 or $300 billion company if the people using their platform develop a whole bunch of drugs and biotech treatments. So I think that that's what's coming. It'll be choppy, it'll be volatile, but this is a company that has some pretty big checkbooks behind them. It's not just Cathie Wood, Bill Gates, Cascade Investments. They're never going to sell. And now you have Al Gifford in there. So if you don't really understand what's going on here, you owe it to yourself to learn about platform companies and tech. And now you're starting to see them in other spaces like space and biotech. It's a great business model. It democratizes a particular industry for the small guys. The small guys can now compete with the big guys. This is something I've been talking to you about for a couple of years, that I see a massive shift from investing in big companies to investing in small companies, and then the platform companies that support them. So when you take a look at my basket of stocks, and I own 22 stocks right now with 4 more that I'm trying to get into, you say, pretty big theme here. So the other theme that goes in there is alternative energy, and I just think there happens to be a huge opportunity in the streaming stocks that have all gotten beat to heck because they were tied to telephone companies and old line companies in media and cable companies. You've just seen the deal with AT&T. There's a lot of deals out there in that space as well. So between these platform companies like DNA and your small companies that are growing fast and have good funding and good management and good technology and good people, there's a lot of money to be made out there, even in a market that bifurcates, like the Bank of America guy got on and said, look, the market's going to bifurcate here over the next several years. Where have you heard that before? You've heard it from me. Your old line grandpa stocks, your oil companies, your staples companies, all these companies with low growth and high capital intensity are going to be in big trouble, especially if they're companies that the millennials don't like. There's a whole wave of articles that just came out in the last week telling you the millennials now are controlling the inflows to the stock market. The millennials put more money into the stock market now than the baby boomers. The crossover is just happening right now. Why is that? The boomers are retiring. Some of them are taking money out. So if you don't invest in what the millennials invest in, you're probably going to lose. So you have to pick your spots, get in early, and if they bid something way up, look for that spot to take profits. And if they bid something way down or just ignore it for a while, which is usually going to be the case. When they're ignoring something that's great, you buy it and wait for them to discover it, especially if it's similar to something else they like, because then they'll eventually find it. But what's going on with Reddit is they're just looking for spots to cause short squeezes. The MOAS is what they call it, mother of all short squeezes. And they're really focused on a couple of stocks there, but they rotate and they find other ones to do it with. They just look for spots to go and kick the shorts butt. It's really pretty amazing. You know, for years, people complained about the shorts and their naked shorting. Well, now somebody's doing something about it. It's probably illegal, but not any more illegal than what the hedge funds are doing and, you know, doing naked shorting. So keep an eye on some of these stocks. Ginkgo Bioworks could become a meme stock. It's got the right people involved, I think. And, you know, you've got some very strong hands in here. Could it drop in share price in the short term? For sure, right? That's a pretty big rally, 40%. Most of us should have a cost basis, especially with option premiums of 10-ish, or maybe even 9-ish because of the option premium. So let's say 10-ish. So if you're up 40, 45%, I think it's the same story as Open Door. If you wanted take a little something off the table to buy it back in here, probably 12-ish. I mean, I don't think it's going to drop more than $1 or $2. You know, go ahead and do that. Now, could some short attack out there beat it up short term? For sure. You know, you've got big short investors out there who don't like a lot of these stocks. There's certain investors that just hate all of these SPACs, and I get it. They're early in their history. The SPAC deals weren't exactly on the up and up in many cases. And, you know, a lot of people use the SPACs as a way of getting a yield on their money with no intention of ever owning the stock. So they bought the units, they got those for 10, they were able to sell them for 10.05, and they sold covered calls on them or puts, and they got their warrants. And that's why you get a lot of people cashing in, is because they found spots to buy the units at 10 or below, knowing that they'd get 10 plus interest. So don't get too upset about that. It happens. It's going to keep happening. And you just have to understand that that's why I put an $8 price on a lot of these, is I knew that there'd be some selling at some point and dilution from the warrants. I don't know that I'm terribly excited about trimming this one myself. Maybe I'll write a covered call if it gets closer to 17 or 18. But what I'll probably do is I'll probably just sell my warrants. You know, that's the first thing you want to get out of with all of these. I think a lot of you have warrants on this. So the first thing I'd be looking to do is to sell my warrants, because those have time value, and that's always working against you. So as the stock gets towards 18-ish, you want to exercise that warrant. Somebody asked about SPIR Global. Oh my God, it's still going down. Look, read up on the companies. Just because the price of something changes doesn't mean anything happened. And I'm getting pretty sick of that question, to be honest with you. It's just downward momentum. It's people without any fundamental knowledge just bidding something in a certain direction. It's just all it is in most cases. And this is a new company. It's not like when GE collapsed. There are good reasons GE collapsed. They owned 3 businesses that weren't making money and probably never would. SPIR and Planet are similar companies. They're probably 1, 2 in the world in what they're doing, supporting maritime, weather, right? Read the recent stuff because it's pretty interesting, and they have some pretty neat videos on YouTube, and it gives you an idea of what they do. Now, I don't know what my favorite company in this space is, the space. I really don't. I don't know if it's EST Space Mobile because the total addressable market is in the trillions. I don't know if it's if something in this basket of companies here. Planet and SPIR, though, are very similar, you know, so you take that. Satellogic has the best technology probably, and Black Sky is in bed with Palantir, so you know what they're up to. They're spying on everybody. So you get a little bit of all the different niches of what satellites can be. Again, I don't know where this one's going to go in the very short term, but I'd be pretty surprised if it doesn't break $18 in the next year or 2 or 3. So if you haven't bought SPIR Global yet, again, you can doubt me, but I do pretty good at this. And you can do your little trades, you know, hate me when it does that, love me when it does that, hate me when it does that, love me when it does that. Told you to buy it right in here, almost nailed the bottom perfectly. Now you're rallying. Somebody asks about a new company, Signify. It's not really a new company. It's Philips Electronics light bulbs. And like they bought another light bulb company. It's LED lighting, but with a twist. Remember Silver Spring Networks from 4 or 5 years ago? That's the company that Itron bought. Well, Philips/Signify also is doing lighting projects for cities. I think it's 27 cities now. It was a pretty big footprint. So Itron and Signify here are both in an overlapping space. Your street lights and other lighting for cities that are electronically controlled. So almost all city lighting, all municipal lighting is going LED because it's cheaper than traditional lights and they don't get as hot. And they put out a brighter light. I don't know much about the company beyond that, but the fact that they have the network capabilities makes it something that'll be on my list to take a look at, but it's not cheap either. And I think enough people know about Signify that I'm not really sure that there's this magical upside because it was hidden by from the market. A lot of these SPACs are under-researched. People don't like them because of, just the distasteful approach to rewarding people for not really being investors. But there's a lot of babies in the bathwater with the SPACs. Signify, it's more efficient, it's bigger. The market recognizes it. Probably not much of an edge you can get in it. So that's where I'd probably be hesitant on buying Signify, right? So you take a look at this, do the 5-year chart. Had a heck of a rally, and now it's falling off. So this is where you should have been thinking about it, right? After this. Now, how far down can it go? Right about here. See that support, resistance, low 30s maybe on this one. Again, I don't know much about it. That's just just eyeballing it technically. See, it has this area here, hits it again, comes off, hits it again, and then holds it. So this line, that's probably ballpark where I'd expect it to get into in here. See the big supports there and then the big supports here. So, that's probably about right. And then you take, when it gets down to here, you start taking a look at those daily charts and say, okay, does it have a little bit more downside? Next, do I see supply chain issue as a potential for recession in 2022? No, I was just talking to somebody today. Actually, I talked to 2 people about that today. The rare day where I have 2 phone calls. And I think that supply chains, people have got to wrap their heads around it better. The supply chains are very, very, very temporarily disrupted. Why do I say very temporarily? You can see how fast the supply chains are moving. And it started with COVID, the acceleration in the move. But it had been going on since President Obama. We've known a very long time that we were vulnerable to China, and we've been moving supply chains back. Some big companies, small companies, there's all sorts of companies that have been moving back for various reasons, but the bottom line is money. And the U.S. government, for the strategic industries, provides capital. They're going to give however many billions to the semiconductor industry. You've got Taiwan Semiconductor and Intel both building in Arizona, and Intel expanding some of their other facilities. So when you start taking a look at supply chains, could it cause a recession? There's an awful lot of growth out there right now, an awful lot of money available. If you take a look at the streaming tickers on Bloomberg, or if you take a look at the news feed in particular, you see company after company, especially your Blue Mound, I wish Blue Mound. You see Brookfield Asset Management or BlackRock or Blackstone in the private equity space or KKR. The amount of money they're putting out there to fund projects is huge. So I think we're pretty far away from an actual recession. That doesn't mean that growth can't slow down if there's not a good deal out of Congress, back to that 2% range, which I think is the magnet. The magnet on growth is 2%. So when we're below it, we get pulled up. When we're above it, we get pulled down. Why is that? It's the high end of the population growth curve. Really, the population growth rate is slowing and slowing and slowing. The economy grows with the growth of the population. It's the way it's always been. It's the way it'll always be. And when the population growth rate gets completely flat, there's going to be another adjustment. Those adjustments have been happening since the Great Recession. And because so much of the world has already been pulled out of poverty, there's a lot of old stuff in the world that just needs to be rebuilt. So as we rebuild the world over the next couple of generations, that's what's going to probably keep us out of an outright economic contraction that's of any sustainable duration. Because as the baby boomers age in the United States and around the world, or just as other populations without a baby boom get older, like, China, say, okay, those older folks are spending less money, which is a drag on the economy. Same story, slow growth forever. And the way you defeat slow growth forever is you build it back better. You remodel the world. That's what you do. Why do you think Biden came up with that? Not some weird thing that I think. Everybody who knows anything about the way the world is going knows that you have to rebuild and redevelop a ton of stuff, maintain your growth rate, and keep people employed. If you don't know that, you just haven't studied it. That's fine. You could see the markets get beat up, though, because of the lower liquidity. And Joe Manchin, if he screws things up, we'll get sustained inflation for another year or two. But ultimately, as the supply chains move, going back to that, as the supply chains move, as more energy comes online from alternatives, the inflation is transitory, and it will go away in the next year or two. One of the things you probably saw as a headline or didn't is that the banks are increasing the credit lines of the gas companies and some of the oil companies by about 20%, so they can drill a little bit more next year. I would expect that Saudi Arabia and the rest of OPEC will speed up their additions of oil to the market. Right now, they're adding 400,000 barrels a day per month for the next, I think it's till next April. So that's 2 billion more barrels a day coming by spring, a little bit more than that. And I think they probably throw in another million. I think at some point, Iran and Venezuela come back online. And Venezuela and Iran are cooperating right now. They're trading oil, which, according to us is probably in violation of sanctions. According to international courts, probably is not. So it just depends on whose government authority you want to follow at that time. But oil swaps, light crude for heavy crude, aren't technically illegal. Now we can say that they are because it's what our politicians like to say when they're beating up their base for votes and donations. But Iran gives light sweet to Venezuela. Venezuela gives heavy crude to Iran, and it has to do with making their refining processes work. I do think that Venezuela, though, is going to start exporting oil again, probably to the United States relatively soon. Iran, hard to know, but if you see a nuclear deal with Iran in the next several months or over the winter, it's the fact that we want their oil online. And we figure we can just beat them up if they get out of line. Since we're getting most of our troops out of the Middle East, I think we're also getting to the point of we don't care too much about what happens over there anymore. So as long as there's oil, we don't care. We need it for about another 5 or 6 years. And by then, oil demand will be turning over anyway. What other questions did I miss? Oh, yeah, did the WeWork thing go through today? Somebody mentions WeWork. They got a huge commitment of capital a few days ago. Oh yeah, so that must have been today because a whole bunch of people cashed in their shares. It was down $1, so they're resuming their shares right now. So it's going to go through on the vote must have been today, and the redemptions must have been today, and it's going to have a new symbol on the 21st. So what is that? Friday, Thursday? I don't see what the new symbol is going to be. Yeah, if you can have these questions up before, that's even better. Then I'll have to look it up. So shareholder approval, the symbol will be WE. Oh man, that probably made sense, right? I could have guessed that. So WeWork will be we, and they just got a huge investment. Contingent on this getting approved. It got approved, so the money's going to come in. There you go, right here. I think that WeWork can head up to 30-ish, 2-3 years out. So that's another triple, and it could go higher if they start kicking out a fat dividend at some point, and they get the dividend investors involved. Oh my goodness. Moonchild asks, how does liquidity affect asset prices? More money, higher prices, less money, lower prices. Pretty simple. That's just supply and demand. Oh, and my favorite, Teresa, says, how do we manage some of these positions? So back when I was telling you about AST Space Mobile and how I was doing the puts and calls to trim, how would I manage SunPower? Well, so against a third of my position, I actually just sold a cover, and this is something I was going to put in our retirement income options update too. I sold some $32 calls against a third of my position on SunPower, which got a little bit big, well, almost 6% at this price. So I don't want 6% of my money in SunPower. I'd rather have 2% of my money in SunPower than buy some PBW or TAN because the baskets seem like they're going to do just fine. So you can compare TAN here, pick a time frame, say 5 years. Pretty similar, right? A little less volatility in TAN. PBW is probably going to be about the same, right? So the reason you own a little extra SunPower is because you think, well, they might have some rocket ship potential. So again, Sunrun is in that boat too. So I just, within the holdings of PBW and TAN, I just want to overweight SunPower a little bit, right? So if the stock really spikes, then I'll sell another third of it up here. We'll see if it can get back up here. The first time we bought it, what did we buy it? It was way under 10, right? It was in here somewhere. We bought it, I think we bought it at 5 and 6, actually. I have to take a look back at my oldest shares. But then we got that huge spike. I got a bunch of emails how they love me. Then it came down and I got emails that they hate me. But, I think it probably gets back to here, but it's not going to be a spike like that. It'll probably chop its way up, 5 waves. It'll take a couple years, 2-3 years to get back up to this 50 something. And then we'll see, what it does at that point. Somebody said, so is that your question or not your question? I thought it was your question. So you bought it at 550 and sold most of it at 42. Yeah, that's a decent trade, right? But yeah, I do think you can write some cover calls against the profits and see where it goes from there. I'm not sure. Can you hear my chihuahua? Yes, he's very angry at somebody. Probably the Amazon driver or the HelloFresh. We're testing HelloFresh right now. Seems to be okay. We're going to try Green Chef as well. All right. I don't think I missed anything. Is there anybody listening that I missed your question that you posted? I don't know what Solugen is. No? Okay. Well, then let's call it a day. I have to finish up the the Stocks of the Week article. It's getting really long, so I'm probably just going to cut it off at some point. But I'm trying to find the companies that are reporting earnings in the next week or two. And man, there's a lot of news at earnings. So I might have to start planning these extra week ahead of time in the future. All right, everybody, you take care. All right, have a great night, everybody. Take care.